12% of our account from one single trade.
Hello friends and welcome back to Trading Strategy Testing channel where we learn about new trading strategies and do some live Forex trading together. Today we are doing a Forex fundamental analysis followed by a live Forex trading experience. Well, it is the first Friday of the month, which is my favorite day not only because I can finally relax after a long week, well it's in fact the day when the USD pairs show some super high volatility due to the release of the unemployment rate as well as the non-farm employment change of the country. I will share with you how to enter the market based on fundamentals and major news events and make as many pips as possible. I will go step by step in analyzing and entering the market with a trade that I hope will be profitable. We will place the trade together and monitor the screen waiting for some good results. So far we have tested many trading strategies and indicators on this channel including MACD, Bollinger Bands, RSI Stochastic, Market Structure, Moving Average Crossover Strategy, and more. In our last video we learned about Forex Trading Journal and made a live Forex trade together for the first time. The results were amazing and I advise you to check out the video later on. If this is your first time here, consider subscribing to the channel to enjoy every piece of content and the live Forex trading experiences we share regularly. We are working on a series where we teach and do some live Forex trading so you can get a glimpse into my life as a full-time trader. Let us know in the comment section what strategy you want to see us testing. Let's get started.
The first thing you need to do every day as a trader is to check the list of events which are happening in that day and could have a potential effect on the currency pair you usually trade. There are plenty of websites that offer this service such as Forex Factory, DailyFX and Investing.com. The websites are all the same, so you don't have to worry which one to choose. In today's video I will use forexfactory.com. You can find the link in the description. The Forex fundamental analysis relies on the study of the major macro events that affect the economy of a country or a zone and anticipate the price move accordingly. Every first Friday of the month, the American Bureau of Labor Statistics releases the employment index of the country. This event is among the most powerful drivers that shake most of the USD Forex pairs. The rule is simple: if the numbers are positive, the USD will eventually appreciate, and the currency will have a strong tendency to depreciate if the numbers released are negative. Usually you can look at the forecast value and compare it to the previous one from the last month. Let me know in the comments section if you want me to make a full video tutorial about Forex Factory website and the different sections and services you could use to take your trading skills to the next level. Today is the first Friday of the month of August 2020. I just had the idea of making the video after I saw your overwhelming response to the previous videos on this channel. The Bureau of Labor in the United States releases the results at 8:30 a.m. Eastern Time, which is 1:30 p.m. in my country. Let me know in the comments section where you think I am from. Once the result is made public, the USD chart will usually record a significant spike. You can notice that the forecast value is positive, which means that economists are expecting the unemployment rate to decrease as compared to last month, which is a positive information. This means that the USD will eventually appreciate. You can see that the time now is 10 a.m. 12 minutes, and the unemployment figures will be announced in 3 hours from now. So based on the fundamental analysis, there is a significant chance for the value of USD to appreciate, which means that pairs where USD is the quoted currency will eventually go down as soon as the results are announced. To make sure that we ride a strong spike down, we will try to trade a pair that has USD as the quoted currency, along with a low-performing base one. For instance, if we trade a high-performing currency against USD, the spike or downtrend might not be that strong. We can notice that the New Zealand dollar is pretty weak against a USD, so based on that, we will trade the NZD-USD pair. This currency chart shows the live performance of the different currencies against each other. The pairs in green color are in an uptrend, while the ones in red colors are in a strong bearish momentum. Let's give this video 200 likes if you want me to make another video about this platform and share with you more information about the in-depth interpretation of the chart. To make sure that our decision is accurate, we need to look at the market and wait for an entry signal. Feel free to check out the market structure strategy testing video we have made recently for more details about the entry strategy. In brief, you can notice that the price has failed to make a higher high, and it crossed the 200 EMA, which is a strong support level. The chart 3 hours before the announcement of the unemployment metrics is already on a downtrend, which is another confirmation for our initial fundamental analysis. Let's open up our trading platform and place a sell order on the New Zealand dollar USD. I will showcase this strategy on a $1,000 demo account. I have already entered the trade on my real account, which I am monitoring on another screen. You can see that the price has started to reverse into an upward trend in the 15-minute time frame. You can drop to 5 minutes to see that even better. I will immediately execute a sell order with 2 mini lots. Try to avoid entering the market with a high volume, as the price might go up and the high spread could get you stopped out. It is better to place your order a few hours before the announcement of the unemployment rate. I usually place my trade 1 hour after the opening of the Europe session to have a clear idea about the market conditions. The earlier you enter your trade, the better, as spreads increase as the major fundamental event approaches. After we released a video where we tested a so-called no-loss strategy, many of the subscribers enjoyed the part where we did the live testing. We are launching a new series of videos where we do some live trading. This will allow us to learn more about analyzing the market, setting up our stop-loss level, and managing the order in terms of securing the position when the price moves in our favor or hedging in some other scenarios. When I started trading few years back, I was always looking for mentors who actually apply what they teach in front of the students. Let me know your opinion in the comments section, and kindly give this video a thumbs up and share it with your friends to help the channel grow even bigger. You can notice that the trade has moved in our favor and we started seeing some profit. I have decided to add the stop loss nearby a key level to avoid any sudden stop out and give the price enough room in case it experiences a light pullback. It's important to use a stop loss all the time. You can watch the video where we placed the same orders with and without stop loss. The results were quite unexpected and taught us a great lesson. As discussed earlier, the new unemployment rate will be announced at 1:30 p.m. You can monitor the time by looking at the taskbar. Awesome, you can see that we have made some good profit 15 minutes before the announcement of the unemployment rates. You can move down your stop loss to secure your position, but based on my experience, the price might reverse before it continues bearishing, so I won't change anything for now. Now it's 1:29 p.m. The official unemployment rate in the United States will be released in a bit. The refresh buttons are made available on the news calendar website, and you can click on refresh to be able to see the official numbers as soon as they are released by the authorities. As discussed earlier, you can notice a strong pullback occurred as the market started to experience an unusual volatility due to the liquidity fluctuation. If we moved our stop loss to the entry level, our trade would have been stopped out already. So it's important to be patient and give the price enough flexibility. Let's click again on the refresh button to see the released metrics. That's fantastic, the values are all positive as expected. We will start seeing some bearish momentum now. If you haven't entered the market yet at this stage, you should think twice before entering, as it is too late. Many brokers experience technical issues at these exact situations. The trading volume is tremendous, and many market makers are involved in such high liquidity conditions. The spreads in these conditions are quite wide, and they might not be healthy for a quick scalping trade. Let's look at that amazing strong bearish candle. One of the mistakes that new trader make is getting out of the trade at this moment or closing a part of their position. Well, you can notice that the spread is around 19 to 20 points, which is higher than the average spread for New Zealand dollar USD. This means that even if you exit your trade, you might not make a big profit, as you still have to pay your broker the quoted spread. We need now to set our take profit level. I personally don't advise beginners to hold their position too long. It's better to exit as soon as you see a drop in the spread. I usually set the take profit somewhere nearby a key level zone. Based on my experience, the price will struggle to cross the key level zone, and the spike momentum could easily develop into a ranging market or even a consolidation. You can notice that the take profit has been set a few pips below the latest lower low, which will give me 10 pips in total. Let's wait and see. While waiting, let me share with you this story. Few years back I noticed many so-called guru traders share with their Instagram followers or their audience in general some screenshot of a trade that has made 4 to 5 figures in an attempt to sell a course or signals. These gurus usually open 2 opposite trades on 2 different accounts, so they are sure that one account will blow up while the other one will make some fantastic figures. Of course they will share the profitable one and try to lure their followers into their course, or probably their broker. You can notice that these gurus usually promote shady brokers which are not regulated in strong legislations, as the broker will pay them a commission for referral and for every time their referees enter the market with 1 standard lot and above. We are currently testing a 100% win strategy on this channel. The part 1 of the experience got a lot of attention from you guys, and we will release part 2 sometime soon. Make sure you subscribe to the channel so you won't miss it, and let me know in the comments section if you want me to make videos exposing the different scams that could be seen in the Forex or trading industry in general. Here is the final result. We managed to hit our take profit and the price and made $21, which is 2% of our demo account deposit from just 1 trade with a reasonable risk management strategy. You can see that the price continued its bearish momentum, and if we hold the position we might have been made 60 pips, which will generate $120, 12% of our account from 1 single trade. I hope you enjoyed this video. I will make similar videos in future. Kindly give this video a like and share it with anyone who might find it useful. Happy trading!